You're busy, we get it. You want the lowdown on complex topics fast. Think of this as your shortcut to getting up to speed on the Irish economy, specifically what's been happening over the last year, say April 2024 to April 2025.
Exactly. We've gone through a pretty detailed economic report, the kind most people don't have time for.
And our mission really is to pull out the key stuff, the
Mhm.
important trends, maybe some surprising facts, and the potential bumps in the road ahead for Ireland's economy.
All tailored so you get a clear picture. And,
Yes.
setting the stage, Ireland's economy is generally seen as pretty resilient, right?
Hmm.
Strong within Europe.
Definitely. And heavily shaped by foreign investment, those big multinational companies. That's always part of the story.
Absolutely. Which brings us to overall growth. Because when you look at the figures for this period, you see some, interesting signals, not all pointing the same way.
Okay, right. So GDP figures, I saw those. There was that contraction in 2023, about 5.5%, and then an estimated, 0.5% dip in 2024. That sounds a bit concerning on the surface.
It does, if you only look at that headline number. But that volatility, it's
Mhm.
largely down to the multinational sector. Pharmaceuticals, tech, their global activities can really swing the Irish GDP figure.
Ah, okay.
What's maybe more telling is the rebound we saw later on.
Ah.
Q3 2024 showed 2.0% growth, and forecasts are actually looking, reasonably positive for recovery.
So GDP might not be the best measure for Ireland given that unique structure. It's noisy.
It can be, yeah. Especially if you want to understand the purely domestic picture.
So what should we look at instead for, the on-the-ground feeling?
Well, modified domestic demand, MDD,
Yeah.
that's a key one. It tries to filter out some of those big international swings, focusing on consumer spending and domestic investment.
Man, how did that look?
Much more stable. It grew 2.7% in 2024, and the forecasts are for continued expansion, maybe 2.8% in 2025, even 3.0% in 2026.
Okay, so that's driven by people still spending, consumers feeling confident.
Pretty much. Strong consumer spending, yeah. And also domestic investment, though there was a slight wrinkle there.
Oh, what was that?
Well, overall, domestic investment was up 2.2%, which is good. But the report did mention a bit of a contraction, specifically in the construction sector.
Right, construction. That ties into the housing issues, I imagine.
Definitely something to keep an eye on, yes. Housing remains a major challenge.
And the central bank. They often talk about another metric, don't they? GNI, Modified Gross National Income.
Exactly, GNI. That's specifically designed to adjust for things like profits being moved out by multinationals. Gives a clearer view of the income actually staying in Ireland.
Do we have numbers for that?
Not the final 2024 figures just yet, but the expectation is steady growth, pretty much in line with that MDD trend. It's a more, let's say, Ireland-focused indicator.
Okay, so underlying strength seems to be there. What are the basic building blocks of that strength? Why is the domestic economy holding up?
It's a combination of things, really. A highly educated workforce is key that attracts companies. Then there's EU membership, crucial market access.
And the FDI, the foreign direct investment.
Huge factor. The stock of inward FDI, it was something like 256% of GDP in 2023. That's enormous. Like 5 times the OECD average.
Wow. And a lot of that is U.S. companies, right? Around 950 subsidiaries.
A massive chunk, yes. But that reliance also brings risks, doesn't it?
Like what? Potential trade issues.
Exactly. If U.S. trade policy shifts, maybe introduces tariffs, that could have a real impact here, given how linked the economies are.
Which we'll probably get into more with the trade balance later.
Yeah.
And domestic constraints you mentioned, housing, infrastructure.
Still major hurdles. Housing shortages, transport bottlenecks.
Mhm.
These things can definitely put a brake on long-term growth if they aren't tackled.
Okay, let's pivot to the labor market then, because that sounds like a real positive story.
Oh, absolutely. Exceptionally strong. Unemployment was down to 4.3% by September 2024.
Wow, that's low.
It is. It dropped from 4.5% earlier in the year and has been under 5% since early 2022. Forecasts say it'll likely stay around 4.4% through 2025 and 2026.
And record numbers of people actually working.
Yeah, 2.71 million employed back in 2023. That was a record. And employment rates were still growing towards the end of 2024.
What's driving that? Just economic activity.
Partly, but also growth in the labor force itself. We've seen strong net inward migration, people coming to Ireland to work, and interestingly, record high female labor force participation too. Over 61% in Q3 2024.
That's great to see. And those multinationals we keep mentioning, how much do they contribute to jobs?
They employ about 12% of the workforce directly. But, and this is key, they account for around 19% of the total national wage bill.
Ah, so higher paying jobs generally.
Exactly, which links to wage growth. Average weekly earnings were up 4.6% in 2023.
And hourly earnings.
A big jump there if you look back a bit, up 25% between 2019 and 2024. Plus, the minimum wage went up to 12.70 an hour in January 2024.
So a tight market pushing wages up. What else characterizes the Irish labor scene? Is it flexible?
Generally considered quite flexible, yes. High mobility, highly educated workforce, as we said. Pretty balanced gender distribution, too. Unionization is relatively low, around 25%.
And likely to stay tight.
The central bank seems to think so. Demand for skilled workers, especially in tech and services, is expected to keep things tight.
Okay, fascinating. Let's talk trade then. Because that 50 billion trade surplus with the U.S. in 2024, I mean, that number just jumps out.
It's staggering, isn't it?
Yeah.
And it's almost entirely down to exports from U.S. multinationals based in Ireland. Tech, pharma mostly.
That scale.
Yep.
Must create some diplomatic conversations, potential blowback.
It certainly does. The possibility of U.S. tariffs is a real concern, as we mentioned. There are ongoing efforts to, let's say, manage that relationship carefully.
Understandably. But overall exports, besides that U.S. surplus, they're recovering.
Yes, we saw a rebound in the first half of 2024. Pharmaceuticals were strong, and service exports too, things like computer services. The outlook there is for continued growth.
Now, the report mentions something about contract manufacturing making the numbers look bigger than they are. How does that work?
Right, okay. So imagine an Irish-based company designs something, maybe a medical device, but the actual making of it happens somewhere else, say Asia,
Okay.
because the Irish company owns the intellectual property or manages the process. When that finished product is sold globally, it can sometimes be recorded as an Irish export, even if it never physically touched Ireland.
Ah, so it inflates the figures.
It can, yeah. It makes it a bit harder to track exactly what's being produced in Ireland versus managed from Ireland.
So besides that effect, what are the genuine powerhouse export sectors?
Still, pharmaceuticals, tech, and financial services. Those are the big three, really. The corporate tax rate, even at the new 15% level, is still seen as supportive for attracting them.
Right.
And if you strip out some of the intellectual property stuff, service exports show pretty steady growth, too.
Okay, what about the other side? Imports? The report said they can be inflated too. Royalties?
Yes, it's a similar kind of distortion from multinational activities. An Irish subsidiary might pay large sums back to its parent company, say in the U.S., for using patents or brand names.
And that counts as an import.
It often gets recorded that way, yes. So these royalty payments and IP transfers inflate the import figures, which then offsets some of the big export surplus when you calculate the overall balance.
So the whole balance of payments picture is just heavily shaped by these multinational flows.
Massively. The current account surplus exports minus imports plus income flows, it is boosted by exports, definitely. But then it's pulled back down by those royalty outflows and profits being sent back home by foreign firms.
And things like aircraft leasing add more complexity.
They do. Ireland manages a huge chunk of the world's leased aircraft fleet, maybe $100 billion in assets. And you also have redomiciled PLCs companies legally based here, perhaps for tax reasons, but with limited actual operations or employment. They skew the data.
So lots of statistical noise around the edges.
A good way to put it.
Mm-hmm.
Though the actual investment flowing in, FDI, is robust and it helps balance things out. But yeah, tracking it all precisely is complex, hence things like net errors and omissions popping up in the accounts.
And looking ahead, global tax changes, U.S. policy, those remain big watch points.
Absolutely. Vulnerabilities are definitely there.
Okay, let's shift to interest rates and inflation. Ireland's in the Eurozone, so the European Central Bank calls the shots on rates. What's been the story there?
Well, through 2024, the ECB started to ease policy. We saw rate cuts. That was driven by inflation coming down across the Eurozone generally.
And the impact in Ireland specifically, did it help?
The Irish banking sector is generally seen as well capitalized, pretty healthy. Government borrowing costs stay low in line with the Eurozone, so lower rates did probably support spending and investment to some degree. But as we keep mentioning, it likely added fuel to the fire on housing affordability. Lower borrowing costs tend to push up demand when supply is already tight.
Right. And construction faced challenges too.
Yeah, they had the hangover from earlier higher rates plus rising costs for materials and labor, so it wasn't all smooth sailing.
Okay. Inflation itself. How has Ireland fared? It's been a global headache.
Ireland actually saw headline inflation drop quite dramatically. It hit 0.0% year-on-year in September 2024, lowest since early 2021.
0%. Wow. Why so low?
Mostly falling energy prices compared to the previous year and costs for industrial goods easing off. It did tick back up a bit later to 1.4% by February 2025.
And the outlook.
Forecasts suggest it'll probably stay near the ECB's 2% target. So relatively contained on the headline front.
But I sense another but, core inflation.
Yes, exactly. Core inflation, stripping out energy and food that's been stickier, stayed above 4% for quite a long stretch there.
What's keeping that high?
Mostly the services sector. Price increases there, driven partly by the wage growth we talked about, and crucially, housing costs, rents, property prices. They've been outpacing earnings for many.
So that's hitting people's real disposable income, even if headline inflation looks low.
Precisely. The cost of essentials, especially finding somewhere to live, remains a major pressure point for households, even though the peak inflation of 2022 is behind us. Government supports have helped, but haven't solved the underlying issues.
Okay, let's look at government finances. Surplus sounds good.
Yeah, the government ran a surplus in 2023, about $8.3 billion, 1.7% of GDP. Revenues were up, boosted by tax receipts, including a big one-off payment from Apple.
Spending is up too, though.
It was, but revenues rose faster. The projection for 2024 was also for a surplus, maybe even larger, though expected to normalize a bit in 2025. So the public finances look pretty solid overall.
And consumer spending, holding up.
It grew 2.3% in 2024. A bit slower than the year before, but still healthy, supported by real wage growth, wages rising faster than inflation, and those government cost of living measures.
We keep circling back to housing, don't we? It seems to overshadow a lot.
It really is the critical issue. Affordability, rising prices, rising rents. It's impacting everything. It's slowing down new housing completions, leading to that contraction in construction we mentioned.
And other infrastructure issues persist too, transport, energy.
Yes, those deficits are still there and need significant investment.
How about different sectors? Any standouts, positive or negative?
Domestic services generally did okay in 2024. Distribution, professional services, hospitality saw growth. Construction, as we said, struggled. The multinational sectors, they drive exports, but their investment can be very up and down. Services overall remains the dominant sector by far, just in terms of company numbers.
Any good news on the household finances front? Debt.
Actually, yes. The ratio of household debt to income has improved quite a bit since the crash years, and overall disposable income has expanded. So financially, households are perhaps in a more resilient position than they were a decade ago.
Okay, one last big topic. Climate targets. Net zero. Ireland has ambitious goals. How's it going?
It's a mixed bag, really. There's definite progress on renewable electricity, mainly wind power, maybe 35% electricity in 2024.
But the target's much higher, isn't it?
It is 80% eventually. That's still a big hill to climb. Transport is another area. EV uptake is rising, maybe 22% of new cars. But overall, transport emissions are still very high.
And agriculture. That's always a tough one in Ireland.
Huge challenge. Progress on reducing methane emissions has been limited. There are pilot programs, but also resistance. It's a very sensitive sector.
So is Ireland on track for its, say, 2030 goals?
The report suggested there's a significant risk of missing the carbon budget for 2021-2025. And current policies might only deliver about a 29% emissions cut by 2030 when the target is 51%.
Oof, so big gap.
A very big gap. Policies moving to act. Budget 2025 had billions for climate initiatives. The carbon tax is increasing steadily. 56 euros a ton in 2024, heading towards 100 by 2030.
But it's a balancing act, economy versus emissions.
A very difficult one, especially with the reliance on FDI and agriculture. And, public buy-in for some of the necessary changes isn't always universal. It's tough.
Okay, so summing up, looking ahead, what are the biggest risks and what's the overall feeling? Cautiously optimistic.
I think that's fair. External risks. Those potential UF tariffs, wider geopolitical instability, global tax reforms kicking in, maybe the ECB having to adjust rates again if inflation elsewhere proves stubborn.
And domestic challenges.
Housing. Infrastructure deficits, sticky services inflation, wage pressures potentially keeping core inflation up, and the sheer scale of investment needed for the net zero transition. It's a long list.
But the outlook isn't bleak.
No, not at all. The baseline forecast is for an economic rebound in 2025, maybe 4% GDP growth, MDD around 2.8%. The labor market should stay tight, inflation relatively stable, public finances strong.
So resilient, but facing hurdles.
Exactly. The potential is there, but tackling those structural issues, housing, infrastructure, climate, is absolutely critical for sustained, balanced growth.
Right. So for everyone listening, the takeaway seems to be an Irish economy that's performing well domestically, especially in jobs, but heavily shaped by global forces and facing some serious homegrown challenges, particularly housing and the green transition.
Absolutely. And maybe a final thought to leave people with. Given that deep reliance on foreign direct investment, how vulnerable is Ireland's long-term prosperity to shifts in global trade, technology, or even geopolitics? What does true economic resilience look like for Ireland in the decades ahead? It's not just about the next year's numbers.
A really crucial question. Plenty to think about there. We hope this deep dive has given you a clear perspective on the Irish economy right now. As always, keep exploring these topics and how they connect to the wider world.